Of course. How's the preset going so far?
Good. So, our main priority is, of course, everything is functioning as it should, which is always that kind of, I don't know. For me, it always feels like a big step moving across from testnet. I always feel like everything's going to break and not work, but it's all working. Slow and steady, which is kind of what we expected. So, getting some mints in anyway. So we're pretty happy with where we're going. Not going to mint out in the next 10 minutes. Well, you never know, but. It's kind of not, as we'll go on to discuss, not the product that we're building. So we're happy with how everything's going.
Oh, that's awesome. I mean, it's always good to hear that. It's it's a very it's not only the focus on just selling that stuff, but also that everything is working, right? Like that you take care of that as well.
We were implementing with Paper, which means they're kind of almost like an on-ramp, so you can use your credit card and stuff, and it's something that ourselves as a team have never used before. So it's always just a little element of unknown, but it's really cool in the sense of how much it makes it a better user experience being able to buy in with their credit card. But obviously that user experience thing runs smoothly as well. The last thing you want, so many DeFi apps, it's like you got to refresh them a million times, clear your cache, restart your PC, flick a few fuses in your house sometimes to practically get the dApp to load the right data. So we want to try and change that around where possible and get a nice smooth clear, no bells or whistles, just everything nice and clear in terms of investors coming in.
I mean, especially also from the business point aspect, like you don't want to lose out on people having a bad user experience while if they're landing on your website, on your dApp, and if it's like complicated to them, that you might lose out on potential investors. So that's
yeah,
and it's very interesting also this credit card aspect. But I believe Mad Hatter is definitely going to grill you on that. Does Kilmac also want to jump up on stage, or?
He's usually, I don't think so, unless he's decided to suddenly share his voice with us, which I find unlikely. I believe it'll just be myself on stage. He'll just be there to ridicule me from the comments.
I mean, that's also how I like to do it. I mean, after the intro, I'm just going to dip, and then I'm just going to annoy Mad Hatter in the DMs and ping him constantly. Because I know that he loves that.
Yeah, there's nothing we like more than when we're trying to figure out what to say and answer questions and seeing all of our DMs crop up with notifications of someone saying, you shouldn't have said this, you should have said that, or make sure to mention this. It's like I can barely string a few words together, let alone think ahead and read at the same time.
Especially Mad Hatter is quite insane, but like sometimes he's like talking on he's talking at the same time he's typing in a stage, like in the stage questions channel, and at the same time also he's reacting with the gift to someone else, and I'm like, what the fuck is happening? Like you got 3 people sitting behind your PC at the same time, and I believe Mad Hatter is just it's just a concept. It's just like Banksy or Anonymous, right? Like it's not a person, it's a group.
Yeah, it's probably like a big call center.
Sorry?
He's probably like got a full call center of workers there, just making sure everything's running smooth.
But yeah, let's get this started, I would say. I mean, people are trickling in, and as you know, we tend to get busier once we are going. But yeah, we're recording. That's perfect. Okay. Hello, and thank you all for coming tonight, this morning. Welcome to The Pillars. We are a community-led space aimed at supporting protocols and educating our investors for intelligent, meaningful conversation. Here, we ask the tough questions you all want answered. Let me now introduce to you Bond, Hybrid Bond. I wanted to do the joke, sorry. And we have OX Solo, 1/3 of the team of the founding team of Hybrid Bonds in here today. Thank you so much for coming. Also, thanks to the audience for showing up today. As you can see, we have a $200 giveaway, which I have to explain. On the one hand, we have a $100 BUSD giveaway happening that is going to be separated into 4 times 25 BUSD as per usual. And then I believe, please correct me if I'm wrong, we have another $100 NFT that we're going to give away as well to someone lucky tonight. As you guys know, in order to win, you have to join that Hybrid Bonds Discord. Maybe also leave a message, tell everyone hi. And yeah, I hope everyone enjoys. I'm going to get off the stage now and have fun.
Thank you very much, David. Solo, how you doing, my man?
I'm doing very well. I'm super excited to be here. How are you?
I'm very well, thank you. I am very much looking forward to this conversation. I think it's going to be a good one. Have no idea how long it's going to run. I've set the rest of my evening into the morning free. So, yeah, let's aim for 4 hours, I think.
Yeah.
That feels reasonable.
I'm here for it.
You guys have an exciting day today. Your pre-sale is currently running. How's that going?
It's going well. We're happy with it. Nothing mental either way, which is honestly kind of what we're looking for. So nice and relaxed. Everything's functioning. Not a million tickets with this era, that era. So buyers trickling in. Nothing to write home about, but nothing to panic about either. We got pre-sale open for 2 weeks. Main mint following up after that, and products viable at any dollar value raise. So of course we want to shoot for the mint out, but if that doesn't occur, it's no problem.
You're the one that said mint out first, right? You were berating someone earlier for saying it too much, and you got in there first today. First, as always, I want to start with a little bit of a background on yourself, just kind of how you got into this space, why you got into this space, and in particular, your route and journey to setting up and creating hybrid bonds.
Yeah, for sure. It's honestly one that I hear quite a bit these days. Is kind of the same sort of story, right? I got into DeFi and crypto about 2 years ago now, and I feel like it goes down the same route that everyone else does. Is I started investing in stocks, went into options because the volatility in stocks was meh for me, and then the natural progression is crypto, and then obviously it's not long until you're sucked into DeFi. I got in relatively heavily, kind of when the DAOs were really kind of taken off, and I remember, actually believing the Time Wonderland calculator and thinking that this was it. I remember with a good friend of mine, we were investing in that together, and I remember us looking at it and thinking, "Wow, this is our life set right here in a year's time." Shocker, it wasn't. And that was pretty frustrating time, because that was my kind of realization that a lot of what you see on Twitter and you saw in the news about crypto and its sort of life-changing opportunities was in fact not very true. And so I was pretty frustrated with the space for quite a while. I was still interested in it because something that I found very cool was that I was interested in a project called Kepler DAO, and I was able to go into the Discord and just chat to the founders, right? And they went on to raise about a little over $1 million at that point, and then which was actually not enough for the product to launch, so they closed and refunded. And I thought it was amazing to be able to hop in the Discord and just say, "Why are you doing this? Why are you doing that?" That to me was revolutionary, right? Obviously, coming from stocks, you have no equivalent really, other than
right.
A subreddit of everyone else who's poured their money into it. And that was really what got me interested. And so I started working on a couple of different DAOs with the focus of working out the DAO governance structure. So that's kind of how I got started actually working in the space, was building out those systems to, trying to allow a massive group of degens to come to a reasonable conclusion on an investment opportunity, which is challenging. I can promise you that. And basically just began to shop around in terms of looking for work in the space. And as you go around DeFi, you network, whether you want to or not, to be honest. And eventually it got to the point where myself and a few of my now colleagues said, well, honestly, why don't we just do this ourselves? Because we'd had a little string of working on different projects where we thought, it's nice, and we get to kind of do the work that we're interested in, but really I'm not quite happy with the overall route this takes, and that always just begs the question, well, why don't we just set this up ourselves, and we can run it ourselves. And the beauty of DeFi is those low barriers. It's very doable, and so we did. We got into it, launched Hybrid Finance about a year and a half ago now, and I'd love to say the rest has been plain sailing, but it hasn't. But we're super happy overall with where we are now, and I think that kind of rounds out my journey.
It gives me a very nice insight into your journey. Thank you. When you guys first decided you were going to tackle a project, be it hybrid finance or hybrid bond, did you think of this? And it's going to be less so for hybrid bond, I suspect. With hybrid finance, did you think, right, we want to tackle what we've already seen that people can't do, and we want to do it better, or we want to prove that it works? Or did you try and come at this from a completely different angle, something new that you thought was going to be sustainable that the space was missing?
It's a good question, actually. I think everything that we've ever really done in the space has never been, or for me personally anyway, it's never been centered around doing anything groundbreakingly new. My approach, I wouldn't consider myself ever to have been at the real kind of cutting edge of these things. So my perspective was always, how can we, there's a lot of good in DeFi, and that good is generally around new tech and new ideas and new accessibility. But there's a whole lot of bad as well, and that usually is revolved around inefficiencies, or obviously bad intentions from bad actors and things is obviously a big one. But just a lot of the time with these big jumps in progress, there also sort of comes, these people don't tend to be the best, or they tend to be too far into the newer side of things, right? And maybe losing some of the values that were the building blocks really of most of our traditional finance, which is obviously incredibly successful and functional, right? And so it was always, how can we take the good of the sort of hyper new trendy DeFi, but how can we merge it with the same approach and ethics that have built many huge firms in the past, right? That was kind of always the approach, and very much still is the approach. Like when we go on to talk about the bond, it's not a, I should hope not anyway, but I don't think anyone in the audience is going to be confused as to the mechanics. It's clear and functional. It's not the brand newest thing, but the intention and the goal is that it does what it says on the tin. That's really what we want to, the products we want to build.
Great. And one of the reasons I ask is because you guys have really kind of scaled back to something that you obviously believe is truly sustainable, but I also believe it moves towards far more sustainability than a lot of the projects that have been developing these crazy wild ecosystems, and everybody's just trying to build on top of everything else. And like you said, you were in Time Wonderland, and then you've got the auto rebasing of the Seifu era, for example, and then you've got those wild calculators that people throw out there that tell you you're going to be a millionaire in 3.5 weeks if you just keep compounding, etc. And what you guys have done very interesting with hybrid bond is kind of scale it back, and not just scale it back, but you said to yourselves, if we're not, and I'm quoting you direct, I believe, although I'm paraphrasing, if we're not the best people for the job, we need to go and find the people that are, and then start working with them. Was that always the ethos when it came to hybrid bond?
Yeah, definitely. The sort of phrase that we coin is like, not reinventing the wheel, right? If we have identified a aspect of the market that we want to include in our bond, well, why not use the leaders in that field? A lot of projects, they want to have, and understandably so, they want to have their trading bot or their this or their that, and then that's very important for the projects that they're building, but not for us. Warfi is kind of the main example we were partnered with on the bot front, which we can get into in more detail. But there's no need to go and kind of overcomplicate it. They have exactly what we're looking for. They share very strongly our beliefs in the space as well, which is always a benefit. But their product is a perfect fit. So let's just bolt that on. Let's not mess around trying to reinvent the wheel, as we were saying. That's it's a very important part of the approach that we have with the bond, for sure.
Great. So talk to me about the bond. How does it work? Tell the listeners kind of, for those that aren't coming directly from your community, for those that haven't necessarily heard about you, can you explain a little bit about how this ecosystem works and what it is that they can expect if they jump into bed with you guys?
Yeah, for sure. So the hybrid bond is an NFT offering, and it is focused around what the sort of buzzword is become now is real yield. So if we want it in simple terms, it's just an ETF of real yield opportunities in DeFi. We focus on three because these are, for us as a team, what we think of when we think of this sort of core, legitimate, tangible, and sort of future-proofed mechanisms of generating returns in the space. So we've got mining, Kadena, Litecoin, Doge, CKB, Bitcoin as well. That's obviously a staple. The flip side to that is we do want to consider then, let me rephrase, we also have yield farming of blue chips. Obviously going from mining, we want to consider in the yield farming aspect, validating. That was the original aim of the yield farming section. It was validating, but the rates are just, it's so hard to justify validating when you can get better rates on Lido. And then once you go to Lido, well, why don't you go to, for example, our one of our partners, Kian, who do decentralized automation strategies on top of that and boost your yield for, really not a huge change in risk structure. So that's why we kind of grew it out to be yield farming in general. So it is just focused around accumulating a big, decent bag of the blue chip assets now, putting them to work now. But really, that's an element of the bond that will kind of pay out later should prices increase down the line. And then our third section is trading, more specifically trading bots through a fairly well-known protocol called Wolfi. Those are our kind of bolt-on partners for there. So that's the focus. Comes out then in the form of a quarterly airdrop of those profits to the NFT holder. It's about that one click, one product diversity, focused on sustainability and longevity.
Right, great, thank you. And of course, people are going to want to know what the percentages back are and what the entry points are if they want to get in. So how much are these NFTs going to cost them, and what percentage back can they expect from each of these NFTs?
Okay, so two NFT tiers in terms of pricing: Hybrid Bond Lite, Hybrid Bond Max. $500 for the Lite, $2,500 for the Max. Really consider the Lite to be the staple product. There's 400 of them in the collection versus 50 of the Max in the collection. The Max is something that's there to facilitate the people in the audience as we go around to do these AMAs that this product really resonates with, and it's something they want to get into in a big way. It's not something we kind of expect to ship loads of. The focus more so being on the Lite. There is a difference then in projected returns. Please keep in mind, these are projected returns. They are dependent on what we make, right? We have everything running that is in this portfolio. So we already have miners running. We are already staking various blue chips, and we're getting into Warfi currently. And so they're projected based off what we are currently getting. And we look at really about 8% quarterly. I know quarterly is not a common metric in DeFi, and I'm terrible for bouncing around with timeframes. So yeah, about 8% quarterly for the Lite, and then about closer to 9% quarterly for the Max, which is just based off a difference in fee structure on the Lite versus the Max. Not in ongoing performance fee, but just in the initial raise fee that we take off that value that you put in. So the Max contributes as a percentage of its total value, a higher percentage, and so it gets a better percentage back. It's important that we do give benefits to those people who get into the hybrid bond Max and support us in and get this product going in a big way early on. But a very important focus for us in everything that we ever build is that when we design it for the average investor. Okay, not the whale, and equally not the smallest investor, just the average one. And that is the priority. And where we can benefit someone else, we will. but never at the expense of that original person. So it's not about making the max super lucrative and then just kind of, shoving the lights out there to people who can't afford the max. It's about focusing on the light, but yeah, giving incentives if that's something people want to do as well. I hope that answered it.
It does, yes. And you guys, as you say, are already mining yield farming as well. You're just about to get in, or you're currently at the entry point with Warfi. How back tested is what you guys are currently doing in the other aspects? Are we talking weeks, months, a year, for example? Say again, sorry.
No, sorry, you just broke off for a second there, but I got the gist of the question anyway. So in terms of going back, I'm just trying to think exactly how long we've been mining for. I think it's over a month now that miners have been in place. Not massive there, but we can, like, miners are, it's tricky to project. It's probably the most challenging to project of all of the sectors that we have, right? Because you've got so many different factors at play. Electricity costs, obviously, being a big one, but then also mining difficulty, and then you have the fluctuations in token prices, and then also fluctuations in usage, which are going to dictate your fees. So we have, projections on our white paper as well. Mostly, to be fair, if prices increase. To get an idea, mining wise, we have about a 40% profit margin at the current difficulty and pricing. So it's something that we're quite comfortable with. I'm sure there will be questions as to why we're not in South America, and we can get into that. But
yes.
In terms of back testing, it's not something that we have done massively, other than your kind of standard enough. We obviously have to check about viability, right? And at, what sort of pricing do we start to get into those iffy waters, and so that's mostly been prioritized in that mining. So like I was saying, just with currently it's about a 40% profit margin. We're feeling pretty comfortable, to be honest, that if we do see some dips in pricing, that all hell doesn't break loose in terms of profitability.
Sure. Yes, in terms of placement of the miners and why you're not in South America, I'm definitely going to touch on that. I appreciated the answer that I've heard so far from yourself in another AMA in relation to that, and I'll wait for the time for me to ask it and then let you give that information. But I thought it was a good answer, and I enjoyed the pushback that you gave on that. And I think people listening will enjoy it too. But let's circle back to, the kind of work that you guys were doing in the background before you set this up, and really the road that you came to in order to get to the pricing that you're currently at. Some people might say, look, $500 is not a massive amount of money, but it is a lot, and I can't necessarily afford that. Did you guys really have that in mind when you were thinking about putting the pricing at 500 and 2,500? And, what would the response be to someone who might be sitting on, say, 150, and they just fall short of that kind of entry barrier?
Yeah, it's a good point. It's a tricky thing to price. Obviously the pricing, the collection size, and ultimately the overall size of your raise are all, three things that you have to organize together. And obviously the lower the pricing, then the more you have to have a bigger you have to have a bigger collection size to meet a bigger raise. It's tricky. The one contributing factor is how to phrase it. The bigger the batches of funds that we deal with, the more efficient it is. Even just from a gas perspective, even from the end user. So for us, $500 is accessible. For I'm going to say most. I could be incorrect there, but it's not outlandish. I think it would be. No one would really say, like, dear Lord, that is excessive. The thing is, it's quite similarly priced to what you would get if you were going into a more niche NFT. So, for example, a mining NFT, you would be looking at a similar price point. But with us, you're getting in at a similar price point to a huge variety of different strategies. So it allows it to be competitive, and it allows our diversity to kind of kick in without kind of almost diluting isn't exactly the right word, but going down too far in value to the point where we get a massive amount of collection, which would also, the more that it's spread around, does just implement some minor frustrations. For example, airdrops then to a larger quantity of NFTs is going to be more costly and gas wise.
Right. Of
And
course,
then,
and it's more work, right? It's a perfectly reasonable pushback to say, well, also it's just going to give us a lot more work if the more we fractionalize the entry point, the harder it becomes, because you've then got more wallets to be looking at, more people to be looking at. On top of that, just more investors that are going to be throwing their 2 cents worth in at this beginning stage. Is that necessarily going to be useful to you guys, right?
yeah, exactly. And I think probably the main thing, which has just finally kind of come into my mind, I was trying to think around there because I was like, I've got a better reason for it than that. It's the kind of product that we're making is not really something that it's not. Dear God, I'm going to mention Pepe again, which I don't know how it comes into these AMAs so much, but it's not Pepe where you put $27 in because God, it could turn to zero, or God, it could turn to a few million. This is something, that we want our investor to be much more sure about. And yeah, not everyone is going to have $500. That is a fact, and that is frustrating. You're not going to please everyone with a price point, and $500 is pretty decent if this resonates with you. And if it resonates with you, then we want you to get in. If it doesn't, stay out. It's not about me trying to convince you to buy something that you don't want to buy here.
Mm-hmm.
It's just about me explaining what our product is, and you really testing it and figuring out exactly what it is and making sure it is what I'm trying to say that it is. And then hopefully people in the audience, some of them are sitting there thinking, God, this is something I really want to add to my portfolio. And $500 is competitive pricing for them. For someone who's on the fence about it and is like, I'm not, this is not something I really want, but it seems kind of popular at the time, I'll throw a bit in. That's not really aligning with the vision of what the product that we're building. So that's kind of the contributor, probably the bigger contributor there.
Right, great. And again, I understand that pushback. Are you thinking of ways to maybe lower the barrier of entry, or perhaps encourage groups of people to pull in for an NFT somewhere down the line? If you guys do another batch of fundraising and you're releasing more NFTs, will you perhaps at times, if you guys are more comfortable, things are running smooth, the miners are doing what they're doing, your yield farming is doing what it's doing, WarFi is doing what it's doing in terms of trading bots, will you consider perhaps giving these kind of I don't know, mini holidays, for a lack of a better phrase, so that someone can get in at a lower amount? Or is it always going to be around this price point for the slightly more serious investor in what you guys are doing?
Yeah, it's a good question. In terms of pooling, it's always just a pain, because the second that you pool, your kind of easy enough distribution mechanism's been thrown out the window. It's something, yes, we would like to do. I would always like to think that our products are as accessible as is possible. But the problem, anytime that people ask for me for things down the line, if I can't say yes, it's completely something we're looking at, I'd rather just kind of say not really, because the reality is it's not going to come out in a time frame that if I say, yeah, it's something we're looking at, and someone thinks, okay, great, and is paying attention, it's just going to look like to them that it never happens, right? Because it is it's going to be too far down the line. So I'd say, look, not at the moment. If the perfect mechanism crosses our desk, 100%. Yes, we would love to do that, but that hasn't come about yet.
I think that's a very interesting response, and is in keeping what I kind of said at the top of the Q&A, and you reiterated with, we're not here to reinvent the wheel. If the perfect mechanism comes along, in other words, if somebody creates something, and this is how I'm interpreting it, if someone comes up with something, creates something that you guys think is worthwhile and can aid this process and facilitate it, then no problem. You're not going to necessarily go out of your way to build it yourselves, because it's time consuming, it's costly, and it doesn't fit in with what you guys are doing. But you're not afraid to pivot and move in a direction that is going to help the investors if something comes along that is I guess, proven to work, trustworthy in the way that you trust your other partners, and is going to be beneficial to you, but most importantly, your investors.
Couldn't have said it better myself. Spot on.
Great. I think that's a very good way to approach this. So let's talk about the different aspects. Let's talk about the mining. You mentioned the reason why you're not, or there is a reason why you're not in South Africa. I'm keen for everyone to hear that reason because I like it. There are going to be people frustrated with the response. They are going to start saying, well, hold on, we could get higher returns. We could be earning more money here if you just moved. Why is it that you are more comfortable in Texas?
Yeah, it's one that is a very good question, and it's always asked because we have the likes of AlphaShares, got Famco, some pretty high-profile mining operations heading down to South America, like the Paraguay, and their selling point is their electricity rates, right? And so that's what they're flaunting, and they're really going for the neck of everyone who's not got 0.3 cents a kilowatt or whatever mental rate it is. So it's about risk to reward. This is not a product about eking out every last cent of profit at the expense of risk. Okay. South America are fantastic operations. I'm not here to try and tell you that those other operations are not good. They're great. But we can all acknowledge that they come with risk. Legal landscape is not incredibly clear down there. I know people would argue otherwise, but the reason I'm saying that is, in my experience, in these sort of environments, if you start doing very well, you don't go unnoticed. You will be taxed or whatever it is.
Right.
In the US, it is much clearer now. People will have pushback to that, and rightly so. There's obviously that bill bouncing around about upping electricity, which, it's our belief and the belief of our mining partner that bill will not pass. But even if it does, Fraction Mining, who we're partnered with for mining hosting, they use green electricity already and are also prepared to move our miners. These miners are our tech. We can move them around. And the US just provides safety and security for our mining operations. The South America just doesn't. It's competitively priced enough that it's for the product we're offering, it's the right risk to reward ratio, whereas South America just isn't. We also do prioritize token mining that has a higher margin than Bitcoin. Most of these South American mining operations are predominantly focused on Bitcoin, which the margin on it is not great currently, and is obviously only going to get worse as we come into the halving. So it's more applicable there. We will mine Bitcoin, but it just won't be quite the same focus that they have.
Great. So effectively, you're paying for more security or a higher level of security, and I don't mean from a technical standpoint. I mean from a peace of mind standpoint, that you're not going to find yourselves waking up one day and the law has temporarily changed and people are clamping down. You're pretty set where you are. You know what's what in terms of the laws there, and you know that if there are going to be changes, those are changes that are going to be telegraphed from a couple of miles away, right?
Yeah, exactly. I mean, everything takes much more time, and yeah, crypto is being relatively well represented in DC at the moment. So, it's something that we're relatively confident on, and it's much easier to get tech shipped out of the US to Canada, for example, than it is to get it moved up from South America. It leaves us more flexible, and less exposed to unforeseeable risk. Maybe think of it that way.
Yeah, understood. So I've heard this question asked to you before. What I haven't heard asked is, do you guys have secondary, third, and fourth sites in mind, kind of already planned that's where you would go if things did go wrong, so that the transition for you guys is not going to include having to frantically search for somewhere, but you've already got a couple of places researched, you trust them, let's say Texas isn't working out for you, you can get out of there one day and be somewhere, a week later up and running.
That's a good question. I couldn't say completely, but completely either way, to be honest. So no, in the sense, like, I can't say yes, it's these. We speak a lot with another mining host called Xeno Mining. Now they are also in the US, so there's not a great difference there. Fraction do offer a decent amount of reassurance in that front, because if that legal landscape changes drastically enough to affect us, it will drastically affect them, and they have, I think they're in basically they have one in mind for themselves, which they will be able to move us to, which is in Canada.
Right.
So yes and no, not entirely, but equally, it's not like we would be completely like, oh god, we've got not a clue. What I would envision happening would be to a move still with Fraction up into Canada, which shouldn't be something major in time frame. The Americans are like, they drive like mental hours straight, so they'll just pull them all up there. Not like us Europeans are like, 3 hours, I can't do that.
Yeah, it's true. Great. I think the investors are going to be happy to hear that there is a contingency, even if it's not necessarily born of your own kind of research, but you're entrusting that to who you guys are using at the moment, and they have talked you through what their contingencies are if things go wrong. That's a key aspect for people, especially when it comes to slightly lower returns, right? Because for anybody that is looking to get into something that has a lower return, they obviously expect longevity with that particular project, certainly more longevity than we're seeing at the moment with a lot of other things that offer higher returns. And anything that gives them the peace of mind that you are doing what you can to ensure that this goes on for as long as possible is going to put them at ease.
Yeah, exactly. I mean, that is our job with this product, is to manage it and ensure that it is here years down the line.
Right.
That is the most straightforward description of what our jobs are going down the line.
Right. And before we get on to the next aspect, the yield farming and the wall bots, because we'll get into them, how are you going to make low returns sexy? Let's face it, you've got a space where high returns are the sexiest thing to investors, right? And as a result of that, people are way too comfortable with failure, especially project leads. You know that you're going to jump into something, and if you get in early enough, you might get 3-4 months out of it, and then it's going to start to taper off. And it doesn't matter how good a speaker somebody is, how well that they can give across their project or the product that they've created. You just know, well, the percentage returns you're giving daily or weekly or monthly, it simply isn't going to be sustainable. And people don't want to hear the lower returns because it's not sexy. So again, how do you make this particular protocol and the returns and the longevity of what that might mean sexy?
That's probably the best question I've ever been asked on an AMA.
Thank you.
Yeah, it's a good question, and I'm just gonna debate what answer I give, because I get baited here to, and I don't want to kind of go too much one way. So okay, yeah, I would say one of the best, really, in reality, the best way to do that is by just being relatively blunt. Now it's a line you have to tread and not become coarse, basically.
Mm-hmm.
But by just delivering for once, right?
Right.
I think if you deliver, you don't have problems getting investors down the line. I understand in the short run, you do need to make low returns more attractive to people. That is for sure.
Mm-hmm.
But nothing will market you faster than someone who's made money, right? No one keeps that quiet. Sure, they're not going to scream about it as loud as someone who's 10x, but the nature of what we're doing is incredibly rewarding. It's something we've experienced firsthand from mining, is looking at Antpool and seeing miners functioning and seeing legitimate, money being generated and arriving into your account, I would say is on par with getting 1% daily for 3 weeks and then having a meltdown. People may have to learn that the not so fun way. I certainly did. There's no shame in it. But I think and this is kind of why we want to get things set up, and I want to get our first payout under our belt, is because then we can start to be a bit more clear about that we don't deal in the usual crap that a lot of projects do. And I think that will, once we can start to really back that with payout after payout after payout, I don't see that being an issue in the long term. And then we can start to say, yeah, again, without, we don't want to tread the line and be coarse. Projects make mistakes. Projects fail from legitimate reasons as well. It's not about going after people, and this is where kind of your ethos that has succeeded hugely in more traditional businesses of just being legitimate and straight to the point. And if you can, say things how they are, and people will go out and they'll experience all of the issues with Ponzi-nomics. And even if you make a ton of money, where are you going to put it? What are you going to do with it?
Right.
Like the percentage of people that really lose that money is astronomical. We've got to call out these other projects to a certain extent that are doing these things wrong. And I think enough heads will turn slowly but surely as we prove that what happens in our white papers is what happens in your wallet,
Right.
And it's not an easy way to market it. It takes time, but that's the approach we'll take anyway.
It does take time, and I understand where you're coming from. And yes, absolutely, having a working product is kind of the sexiest way in which you can market, right? As you say, no one's going to keep it quiet that they are making money somewhere. And I do have a question about the miners. I'm going to circle back to that in a second, because Serenity is bringing the heat with one of his questions, pun intended, Serenity. But before I do, if I can dial into the kind of making it sexy or making it appealing, I'm convinced this space really taps into the ADHD in all of us, right? We have short attention spans. We kind of want to flick from one thing to another. We're always chasing the next best thing. Are you guys thinking about how you might develop the DApp to reflect what people are earning in real time, be it daily, weekly, or monthly? I know your payouts are going to be quarterly, but will you give them that visual appeal that people can refer to and perhaps refer their friends to, or people who are in other Discords, in other projects, and they can say, right, I haven't had this paid out yet, but look what I am earning, and look what I've been earning every single week until my payout point, to really enforce to those people, you are going to get this amount. This is what we are going to be giving you at the end of the quarter. Or is it something you're calculating at the end of those quarters and then distributing to people?
It's a good question. So I feel like I'm going to be saying that a lot this evening. But DApp wise, we can go on and speak about it in more detail, but we're launching fairly low on bells and whistles, right? So DApp will get developed down the line, but we just want to be clear about that. That's not going to be a launch feature at all. We will, so what we want to be able to do, Kilmac is saying he'll be doing bi-weekly reports. So yes, we want to show what's going on. We don't, you don't have that big gap through the middle of the quarter where like it's silent, right? So we want to be able to show, yes, this is what's happening, to make you guys those returns. This is what it's looking like at this date. This is what it's looking like now. But if we go down the route of showing, this is sort of off the top of my head as well for reference, but if we go down the route of showing daily, weekly, and monthly, these sorts of breakdowns, we are just marketing ourselves down the regular route of every other project, which is going to be able to drastically outmarket us in those areas, right? Because it's not what we do, it's not we're not offering 1% a day. So if we go and put ourselves on the playing field of what's your 1% a day yield, we're just going to get absolutely destroyed. What we need to be doing is putting ourselves on the playing field of where's your yield coming from? How diverse is it? How likely is it going to be around in a year's time? Realistically, I mean that question, it destroys a lot of ways that people are currently making money.
Well, 99%, right?
Yeah, exactly. Yeah, literally, I mean, people can make crazy money, but yeah, if you ask them, is that going to be the thing that's making you money in a year's time? I think most people would say no. And there is a big benefit to being able to say yes to that question with a portion of your portfolio. Again, we're not here bargaining and selling for 100% of your portfolio. You can be getting those 1% dailies. Go off and get them with the knowledge that your portfolio is at least got something solid and something that will be sitting there, and so that you can free up that 5-10% to go and do loads of different sketchy things with. And yeah, for once you can do it with a little bit more confidence, hopefully, because you have something in there that you can forecast.
Understood. And because I know that you said you enjoy a conversation where you get pressed a little bit, so I'm going to give a tiny bit of pushback, and I'm going to be mean, and I'm going to repeat your words back to you and say, you're not here to reinvent the wheel. And this space is built around a certain amount of, or a certain style of marketing. And I don't really like the word marketing, but a certain way of marketing their products, right? So people are going to have a certain set expectation. And it doesn't matter how good your product is. If you start to kind of fall behind a little bit, you can also go forgotten. And word of mouth is great, but people want to see something. Now, you're a very good speaker. You're very eloquent. You explain your product very well. And you're also a very good listener in that respect. Is there perhaps something visual that you might do with your DAT on YouTube, whatever other platform it might be, in which rather than giving those returns on a daily basis, you give a weekly update or bi-weekly update in terms of how everything is going? Lives from the miners, for example, perhaps showing live the yield farming in action, maybe the War5 bots in action, just so that people really have something tangible to latch onto in between the times that they're waiting for their payouts.
Yeah, definitely. So that's a very good point. Something that we have coming from Fraction is they're working on plugins so that we can get live miner, or basically what we get when we look in the AMP pool, into the likes of our Discord and into the likes of our website, right? So you can go and see the current status of our miners, check their online. You can see the hash rate, real-time hash rate, 24-hour hash rate, these sorts of things. We want to break down the barrier so that it's as if you have you're running all of these things yourself. That's the feel that we would like to sort of get, right? Is that you can go and see concisely in one place all of those things. Yeah, that is definitely, and visual is probably the main thing, and that's frustrating for me because you're very kind about my MAs, but that it's what I kind of do day to day as well. There's a lot of speaking, a lot of answering of questions of people who are skeptical of what I'm telling them. So it plays to my strength, and visual things are not my strength. Kilmac in the chat is awesome at making up visual things for us, and like with Hybrid Finance, we had monthly updates, right, which would come out on the Treasury, and that was something that I think we were very happy with and felt like was a good connect. So yeah, we want to. I think probably the best answer to that is looking just towards what I was talking about with Fraction mining, and being able to pull in that live data would be really beneficial, and people can see those tokens mined, in front of their eyes. And there is also the element of even if people do you mentioned about getting forgotten about, and that's obviously a concern for everyone in DeFi. And it happens to so many projects, and it's tough to get back from, for sure. We have a slight advantage, which is you're not really going to miss money coming into your account. People will, if they have moved on and then they come back to their MetaMask and they're like, oh, I probably don't have anything for gas. And then there's, going to be Wrapped Bitcoin, Wrapped AVAX, Matic in there. You're going to go, how the hell have I got this in here? And you're going to go back and you're going to realize that thing that, and that's there's nothing better than finding cash in your pocket that you didn't know you had, right? You take your clothes out of the laundry, you reach in, there's money in there. And you don't know how it got in there. That's a great feeling. And getting money directly into your wallet is a great feeling, especially when you're expecting it. Even if you're not expecting it, and looking back, okay, something I hadn't even accounted for has made me money. I'm going to go back and revisit that. And that's not battle one, right? That's not that person back. I'm not going to sit here and say that's our problem solved. They're like our biggest fan again. But it gives us that very rare second chance in DeFi to grab the attention again. So yeah, it's far from battle one. We will need to be consistently active and consistently pushing things, visuals out and engaging content out regarding what is going on, or else that person is going to be like, oh, what was that? And then they're going to come back and be like, okay, well, they last posted like a month ago. That's just probably like a refund payout or whatever, and just move on. So, but most projects, I would say, don't get that second potential grab of the user of you do want to pay attention. Yeah, feel free to probe if I wasn't specific enough.
Yeah, no, you were specific enough, and I appreciate the pushback. I think it's going to be a tough nut to crack for you guys, because on the one hand, you're going to have people that are going to ask themselves, do I want to spend my X amount of dollars in a protocol that might only last 3 months? I know it's a degen play, but I'm going to get 2x in that time. Or do I want to put my money in something else that's going to last a long time, but it's going to take longer for me to get my money back? And it's then having to not only break that thought process, but add into that, this is going to not just get your money back, but continue to pay you long after you've ROI'd, right? And I think there is going to have to be a shift in mentality in this space, because people are getting tired of just jumping into a product because people are very good speakers, and suddenly one day it dies because they haven't thought about the mechanics properly, or it's just a Ponzi that they've swung as not being a Ponzi. And I think protocols like this one, if done correctly and executed right, do have the ability to run very long term. And I think it's going to be a difficult journey for you guys to navigate at times. But again, like you say, when that first payout comes and you find that cash in your back pocket, that's when people get very excited. So I think you guys are going to see waves, actually. I think there's going to be big interest, and it might come down a tiny bit and taper off a little. And then you'll have another wave of interest as your first payments come through.
Yeah, I would agree. A lot of this also is going to hinge on our ability to accurately portray our product now. This issue that you're bringing up, which is very valid, it scales drastically if we get the wrong investor, right?
Mm-hmm.
And this is why it's very important that I'm not trying to reshape the product now based off in terms of how I present it, based off the sort of questions that I get, because it's not about adapting the terminology used with the product now to try and fit the investor. The product is what it is. And this is why I was listening to your AMAs beforehand, is because the one thing that I hate is not being able to portray what I'm speaking about accurately. So I want to be able to get the point across completely unbiased and clearly, hopefully. And you do a great job of helping with that by probing into the questions, so that the people who join the Discord, they know what they should expect. And there's always going to be people who haven't read the white paper and have no clue. That's going to happen, and it's our job to be there in the Discord to answer those questions and fix all of that. But if we were to really try and shoehorn people into this, then that problem scales massively. And we saw it with hybrid finance when we launched that. The average sort of investor group that we got was way too degen for what we were initially launching, right? And so we got a lot of pushback when it didn't 10x, but it just wasn't the product that we were launching. So we learned that one the hard way, and that's why I think some people don't really believe me, but when I really do say I have no interest in getting the wrong investor in here, because it bites you later on in the bazillion tickets that are claiming that you rugged because it didn't 10x. That is no fun, trust me. So yeah, it's a valid point that you're raising, even if we get the right people in, but I think it does scale based off who we get in.
Right, understood. And I have heard you say now several times over that you want the right investor in. So I absolutely believe it when you're saying it. This isn't the first time I've heard you say it. It might be the first time a lot of people that are listening now have heard you say it. So I always urge people to go ahead and listen to other AMAs in other spaces that they might be interested in, and they're going to hear the same narrative creeping through, just dependent on how it's asked. But you guys are really cognizant that you want an investor that believes in you guys and believes the process that you're taking and the speed by which you want to get there. I'm going to bring Serenity's question back in, because otherwise he might lose his mind a tiny bit. One of the largest problems, he says, with mining is the heat dissipation. So why would you choose Texas instead of a place like Montana, North Dakota, or a northern state where it's colder and easier to cool?
Yeah, it's a good point. When I first kind of got started in crypto, that was my understanding, was mining was done in cold climates. I've been fortunate enough to visit Iceland numerous times, and there's massive warehouses of miners everywhere, because it's so bloody cold. But it's something that when we started exploring mining has never really became much of an issue that we ever spoke about with hosting providers. And we had it definitely, like, if people are familiar with Kadena hashing, I know they had a problem with their KA3s overheating, and KA3s are temperamental to overheat. Ours have shut down because of heating issues back at the start. But as far as I'm aware, with these kind of buy and host containers, that a lot of the US based hosting providers use, it's not much of an issue. And because we're paying a flat hosting rate, we're not too concerned about it as long as our miners are online, right? That's kind of their realm. We will have a much bigger issue if our miners are going offline all the time. That is going to cause issues, and we are going to have to look elsewhere if that is the event. But so far, everything since the original overheat has been running smooth, and it does seem to be mostly just KA3s that we're suffering then. So I think they've revamped the ventilation system. So I'm not able to give like a full or as good an answer as I'd hoped there, but as far as we're looking, it shouldn't be much of an issue, probably mostly due to the flat hosting fee. So it's kind of their problem, and if it becomes our problem, we'll have to move.
Right, great. I think that's a comprehensive enough answer, and I'm sure Serenity will agree. So circling back to the longevity of the project and the fact that you guys want to make it, as sustainable as possible, so that it can go on, I assume indefinitely, effectively. One of the things I noticed, and one of the interesting points that I picked up on your white paper, is that you say that you have higher returns during bull runs, and you kind of give a vague idea of what those returns might be. So does that mean that people can expect those higher returns once we hit a full bull run, and you guys are obviously making more money?
That feels like a trick question of some sorts. No. So yeah,
I'm
yes.
leading somewhere with it. Yes.
Okay. Right.
It's not a trick. The you don't have to be careful. The question stands. I mean, if that's your current format, great. If what you guys are saying is the estimated quarterly ROI is going to be X amount of percent during a bull run, this is what you can expect, and that's the process that you're taking. But is that the process that you're taking is the initial question.
Yes. So if our output increases, your rewards increase proportionally.
Right. Great. So one of the questions I was going to have is, why didn't you take the opportunity perhaps to, instead of changing the rewards that people can get during a bull run, simply put the money aside and illustrate how long the project can go instead, with longevity in mind, and you guys having the desire to want to move forward for as long as possible, indefinitely. It's a real opportunity to keep the same percentage returns because you're targeting a certain investor anyway, and those investors are already buying into your ethos. And you could simply say, right, what we've managed to do during the bull run is extend your payouts for 1, 2, 3 years. Is that something that you guys had considered? Are you considering it? If not, is it something that you would consider a different angle in terms of how you pay out, so that it really plays into what you guys want, which is to add people or give people time and the amount of time they get paid out through you guys?
A bloody good question. That's a good point as well. It's not something that we have considered. So let me consider it now. The initial pushback I'd give is, if we go down that route, your question would change to be, why really should they not try and manufacture this themselves? Why what really is, because a lot of people won't see it that way. For those of us that have been burnt by short-lived projects, it's very, and I'm sure a lot of people here will have that experience and will agree with you and say, yeah, that's a really good point, and it is. But the huge flip side to that is probably the majority of investors that we'll talk to throughout AMAs thinking, God, they're just piling up a load of cash that our money has generated. But they're withholding it for us, and I agree, it's for their own benefit. I'm just kind of playing the devil's advocate here on the other side of it.
No, it's a good point. You raise a good point that people might say, well, hold on, why can't we have access to those funds now?
I think you would have to give the choice, maybe, of like, you can, like, almost like, projects allow compounding, or you can get paid out, maybe something along those lines.
Or find a way to not be responsible for the funds once they've been earned. If the funds are for lack of a better phrase, renounced, and you guys are putting them somewhere that automatically pays out to the wallets. And people can start to see, well, hold on, these guys are building something that can pay out for 2 years, 3 years, 4 years. And as the bull run increases and you guys earn more money, they can see that. I imagine it is also a really positive way to change the mindset. Although I appreciate your point of view as well, that you are going to get people that are going to say, well, hold on, I'd like those funds now. I could have had an extra $100 or $200 or whatever it is. And I wish I had had that. So it's juggling, I guess, what the mindset of your investor is. And it's perhaps an interesting question to ask these guys sometime down the line in 6 months or 12 months maybe, and say, look, what do you guys prefer? Do you prefer getting a variable higher return at times when we're making a lot of money, or would you just prefer to be able to get the same returns, but know that we can sustain those returns and you can, quote unquote, rely on those returns coming in for a longer period of time?
Yeah, it's such a good point. There's the other thing it just raised with me is so if you start paying out returns based from this big bag of cash that you've got, then the underlying mechanisms are probably beginning to falter. And at which point you're going to have a huge debate of we're going to be sitting, let's say, on this decent bag here that we are using to sustain payouts through a challenging spell. Well, why not use that to bolster some of your yield generation options? Why not take that and compound it into more miners and more tech? And that's a fair question, but it's also now using someone else's rewards and tying them up long term in the project, which is probably not great. So you just start to open yourself up, in my opinion, to much more criticism. Whereas if you go, this is what we made, this is what you get, you shield yourself much more from that criticism. And we are aiming to pay out in the thing that is generated. So if people do want to try and hold a little bit and kind of replicate that to a certain extent, there is that slide option there. It's not the same thing for sure. And my colleague Kilmax just mentioned about Wonderland. Obviously, we probably saw it. They kept their massive 100 million treasury for their investors' sake, and obviously that tanked. Now it is different because there's no part of this that should tank, but that is kind of the thing that we sort of want to avoid. But it's a good question, and I can't say that I would ever completely rule that out. But looking at it through my eyes, I personally just prefer what we are doing now. That doesn't mean at all that if the investors choose the opposite option and prefer the opposite option, that we won't go down that route. So
sure.
That's the best answer I can give, I think.
But yeah, no, good answer. Great pushback. I appreciate it. There's pros and cons for every idea, and it's just about juggling which one fits what you guys are most comfortable with best and what you believe is going to be most comfortable for your investors. Someone brings up the point of KYC and doxing, and I hate this question because I believe in proof of work. I don't necessarily believe that I need to see somebody's face. After all, we are in DeFi. It is meant to be decentralized finance. I think the whole reason this space was created is because we wanted to be anonymous. And I think it's unfair at times. And this is a debate that I am going to have with Serenity at some point, because I know he's hot on doxing and KYC, so he's probably screaming at me now. But I hate the idea that investors are demanding that they see someone's face who's created a protocol but won't show their own faces when they're putting money in, and want to raise a complaint or want to scream and shout at you because it's not going in the way that they want. They want to be able to say what they want to say. They want to be able to say it in the way that they want to say it, yet not have any of the responsibility that the project leads have. And it is an experimental space, after all. That is one thing that I think we need to consider. You are KYC'd, you're KYC'd with Obsidian, you trust them. I believe you're also KYC'd with Pelton, is that correct?
It's not actually.
Okay, you're not.
I think we managed to slip under the radar there with him, and because I think he usually gets people to KYC, but presuming he's taking Obsidian to be enough in that case.
Okay, perfect. So you're KYC'd with Obsidian, not Docs. Yeah. Is there a particular reason behind that? And what are your thoughts and what are your pushbacks? And I'm sure you're frustrated at answering this over and over. But what is your pushback when somebody says, "Well, I really want to be able to see your face in order to trust the product"?
It's a good question. and it's a tricky one to answer, but I think you kind of hit the nail on the head with the investor. You know, they want to be able to. They enjoy the anonymity, right? And sometimes I think they don't understand that works two ways. That's the same for us, right? And in the space where your investor has anonymity, it's really a big gamble to give up yours.
Right.
If your investor doesn't have anonymity, it's much easier to give up yours. But in a space where people can make horrendous accusations and horrendous comments and spread them like wildfire through a anonymous account, it's a much bigger leap then to sit on the other side of that and go, "This is where I live," you know, basically.
Right.
And that's just the kind of the reality of it. I don't particularly think the KYC is the best indicator of our security or doxing or anything like that. I think, honestly, the fact that we've been around for a year and a half with the project and we haven't rugged is probably the best thing. Now, that's just my personal opinion. That's what the sort of things that I look for is the fact we raised $750,000 for hybrid finance year and a half ago. I'd be on the Bahamas now if I was going to rug, right? That's for me the way that I would look at it. In terms of doxing, it's not off the table for us, but what we need to have in place before that is we need to have all of our legal side absolutely ironed out. That is the first priority. So our next big focus is getting our LLC set up. Now that's a decent way down the line, but that is our next big goal that we want to hit. So once the bond is functioning as desired, and we can so to speak, ease off the pedal in that sense, an LLC will get set up. That is our goal, and with that, then we can look at doxing. But you know, everyone has to protect themselves, and you know, that bit of anonymity to a certain extent is, I think, justifiable.
I agree. For the record, I also believe that the KYC proves nothing. I mean, there is nothing stopping somebody from rugging when they're KYC'd. And at times, you know, there are ways to get around these KYCs. There are people in this space who have already shown and proven they can go to some of the biggest KYC groups or entities and get around their processes and submit false information and have it be convincing. So, you know, it doesn't say anything. I think proof of work is what counts. But I also understand the other side of the coin, which is, you know, it would make us a lot more comfortable if we could see your face. Why would you take our money if you're not prepared to show who you are? And that is then when it comes into play, where you say, well, I'm not asking you to dive in and give me all of your money. In fact, I'm actively encouraging you to treat this as a pot of money that, like you say, it's like finding some money in the back of your pocket. It should not be your entire portfolio. It should be something that you get, you believe in, of course, but at the same time, you're not entirely reliant on. And when that money comes in, it's a happy surprise.
Yeah, exactly. You know, there's a good, you know, someone's just mentioned they won't invest in any project that's not KYC'd anymore. And, you know, the probably the biggest thing with some KYCs is they're just so bloody expensive. And if you've got bad intentions, they probably that bill puts you off. Our Obsidian KYC was about $13,000 when we did it, you know. Yeah. Mental.
Yeah,
you know,
yeah.
so that's that's probably the most valuable part of it for me. Is just the fact, like, we paid so much bloody money for it. You better believe that we're gonna stay around and use it the whole time, you know.
Yeah, of course, absolutely. And I think that's a side of things that people don't necessarily know. I don't think they often understand the cost that goes into these things. Let's get on to the juicy stuff. Let's get back to the fun stuff. Yield farming. Talk to me about your yield farming.
Yep. So approximately going to make up about 50% of the portfolio, buying up most of your big name blue chips, ETH, AVAX, Matic, BNB, these sorts of things, and putting them to good use and generating more of them. Now we've got some caveats. So there's things that we can't do here with blue chips, which is throw them into any sort of black box yield farming, basically, where we don't know what's going on. We have no interest in that. It does not align with the product that we're launching. We need to use strategies that we can forecast and foresee the risks involved in. So a partner on that front is a Kian protocol, DeFi Automations. They tend to build strategies that loop liquid staking tokens. So staked Matic, staked ETH, for example, and they often loop them through the likes of Lido, right? So just getting that yield kind of over and over, about 7 to 8x generally, and they offer liquidation protection on that as well. They're not going to be our exclusive yield farming option. Put all of our eggs in one basket. So we will be going into variety of LP pools as well. IL is something that is more manageable than ever now and makes a lot of LP pools more attractive than ever, despite potentially lower returns there. The yield farming aspect is one of the aspects that is more so centered around the future. It's earned its position in the portfolio now, but really to see why we want to put 50% into it now is just that prices are good. I don't want to sit here and tell you this product becomes viable at a bull run. That is not the point, and I'm personally fed up of projects that are like, wait for the bull run, because I just don't think it's going to happen for a time. But this is one of the aspects of the portfolio that is centered around its future and not its present. Not that its present is not good enough, it is, but yeah, it really starts to pay out down the line. And it's also not only because the return will increase, but also the value of that overall pot will grow quite drastically. And that's something that we can manage and we can use. It doesn't have to be held indefinitely. It can be sold and it can be reacquired. It is a managed product. So while we are not God's gift of traders, we can still manage that to be as efficient as, I'm not going to say possible, but as efficient as is safe to do so.
And in terms of the payouts from the mining and the yield farming, how are you paying out? I know you're on the Polygon chain. I know you like the wrapped versions of the tokens, and I've heard you say that if the liquidity isn't deep enough, you're going to pay out to stables. Is that still the case?
Yep. We want to give you the tokens as much as possible so that you can choose what to do with them. But there's no point us giving you wrapped Litecoin on Polygon because it's an absolute mile off peg and has like 3,000 in liquidity. So only where it is actually sensible to do so. We'll speak with the community as we progress towards the payout, because something we're a little bit interested in is swapping something that we can't pay out on Polygon for a blue chip that we can pay out in, and one that if we aren't generating it organically, then we could swap the likes of our CKB into that. But consider for now that we'll be paying out in USDC and the solid wrapped versions on Polygon. But we will ask for community input on that and see if there's any other blue chips that they want to be getting airdropped, and then we can filter those in as applicable.
Right, great. We kind of vaguely discussed the pooling idea in terms of NFTs. In terms of people perhaps wanting to come in and use their own blue chips, give you those for a smaller percentage return because they trust you and not necessarily the farm, or they don't necessarily know what they're doing, but they know you guys do. Is that something that you're going to be looking at in the future, or are you kind of hardlined and it's ingrained in you guys that it's going to be NFT and NFT only?
Sorry, I just missed a little bit of that. So that was if people are coming to us with their own blue chips that they want to put into it. Is that correct?
Yes, correct. Yeah. I mean, so is that something that you guys are thinking about? Is it at the back of your mind, or are you only thinking NFTs? You have to have an NFT in order to participate in this ecosystem.
I would say the NFT for this is going to be the only way. We've looked at kind of bonding products in the past where you could kind of bond in with a in-demand asset and then bond out. We were trying to get sort of a self-managing or self-balancing ETF going there for a while, but it just didn't want to exist, that product. It really didn't. So probably not. Honestly, if people are coming to us with blue chips and stuff and they want help, we'd be more than happy to point you in the direction of what we're doing. And it'll be super obvious anyway, because we'll be posting about it all the time. So if you just wanted to have a chat with us and say, I've got a massive bag of blue chips, what should I do with it? We'll give you our 2 cents. Not financial advice, of course, but I just,
Yeah.
it's not. It doesn't fit with this because we want to get stables so that we can diversify more easily. And a single asset makes it much more efficient to do so. So that's why we're not offering the big variety of sort of purchasing options.
Right, great. And it speaks to your desires to be transparent, right? That if an investor comes in and says, hey guys, I'm really keen to know how you guys are doing what you're doing. And you might not go into the finer details of contracts that have been agreed and prices that have been agreed, but I get the impression you wouldn't be afraid to point people in the right direction and say, well, hey, this is what we're using. Of course, you can get one of the NFTs, or you can go in this direction and go it alone, but this is how we're doing it.
Yeah, the goal is that you don't have to ask, that it is all in your face, right? Because that's what's going to sell us, is being able to see this is exactly what they're doing. These legitimate things, that's what's making the money. So hopefully you don't have to ask, but yeah, if you do, we will disclose with you everything that we can disclose with you, right? Which is going to be basically everything, to be honest. There's just a few nuts and bolts that we can't, mostly remining because it's real world. You got to be a little bit more careful there, but overall, we'd be more than happy to talk people through absolutely everything that is going on in the bond.
Right. You've mentioned hybrid finance. Before we get onto the trading strategies and the WolfEye bots, you've mentioned hybrid finance, and I know it had its issues. And frankly, I'm not that interested in talking about why the issues occurred, because they were unfortunate, and we could have a whole nother 2 or 3 hour Q&A just discussing that. What I am interested in is the takeaways that you guys took from it. What did you learn? And I know you would have learned the generic things of who to trust, who not to trust, when to put your money somewhere, when not to put your money somewhere. But is there anything that stood out that we might not necessarily think about that you did that was a real takeaway and significant enough that it helped mold what it is that you guys are doing now?
Yeah, 100%. The single biggest thing that we have learned from that, and probably sort of from my perspective, our proudest sort of progression, is efficient management. And it is a huge contributor to success of these projects. And it's something that now we notice all over the place in terms of people who get it right and people who get it wrong. And that is that a lot of the time what happens is projects raise obscene amounts of money and then they have absolutely no clue how to deal with them. Not only in the sense of actually transferring and managing that money, but also how not to get carried away with it.
Right.
You hear stories of people, projects spending $50,000 on YouTube videos, a single YouTube video, for example.
Yeah. I was just reading that as well. That's ridiculous. I mean, that's insane.
Yeah.
It's madness, and it's so grotesque if you think about it. Not for the YouTuber, but it is grotesque that we ever got to a state where somebody was charging that much because that YouTuber had that much influence that they would be able to drive that much traffic towards you, right?
I think even then that's doing them too big of a service to say that that almost implies it was worth $50,000. Let's face it, no matter how much traffic they were driving towards you, it's not going to be worth that. And it was super bullish to see those projects that used to advertise in Times Square. That outlay was never worth it. There's no way, absolutely no way. And it's not something that we got 100% right with hybrid finance. I can say with clear conscience that we didn't get it that wrong, though. But it's probably the biggest area that we're improved, and it makes me super excited to launch the bond and to know how much we've battened down the hatches expenditure-wise and just got this to something that we can run, on a tiny budget and get viable efficiently. And even as far as marketing, we've been able to spread the word quite effectively and get some amazing amount of eyes on us for what could be very costly down to what is much more reasonable rate. That's probably the main thing. I mean, obviously, like you said, there's the kind of stock things where you get better and much more skeptical, to be honest.
Right.
Particularly if you're me. My colleague has managed to, Macro has managed to maintain an concerning amount of optimism, which is not something I can say I have. But overall, that makes us very good. But I would say the best thing, and for people who want to kind of or don't quite grasp what I mean by that, if you want to take an example of a project that got that right from the second they launched, I'm sure most of you will be familiar with MDB. And I would say like they're a great project, and one they have going with Foxify is very good. But I think, to be honest, the reason that they're in that position, probably almost the sole reason, is just that from pre-sale through to now, they just managed everything so efficiently. They just ran it like what it is, which is a business, and they just got that right, and it made them solid. And so it's something that we're excited to hopefully get right with Hybrid Bond.
Right. Yes, it is a business, and running it is important, and running your community as a business is also important. I will also argue that for you guys, especially bearing in mind you're outsourcing a lot of what you want to do to people that you believe are able to do that particular direction better than you guys, you're outsourcing it to them. But what then becomes important is your self-management as a team and managing you guys as a business. So when it comes to your team and when it comes to you guys sitting down and discussing things, is there any one person that kicks any one person's ass? Is there somebody that steps up and says, hey, right, I'm going to have to take the reins, I'm going to have to be the decision maker right now in order to make sure we can get through this process as quickly as possible? Or do you, kind of lock yourselves in a virtual room and hash it out until you come to the same conclusion?
For us, it's always been about debate. We're a team that generally see things similarly, but for massively or very often not fully the same. So it's very much the hash it out. We're very much good at different things, the three of us, which is great, but it does leave times where people have to say, look, this, your jobs are lacking, or you need to get on this, you need to get that, you need to, improve the pace. You're going to have that in every team, right? Where, I still work 9 to 5 days a week as well. So there are times where they need to say, look, I need a bit of a kick, and say, you need to get X, Y, and Z done. That definitely happens within our team. And it's something that, for me, just any jobs I've ever done, and even educational wise, it's always been in a kind of more no nonsense approach. So I'd always rather someone says, Jesus, improving this a nice and clear way, and then I can do that.
Right.
In terms of agreeing on things and designing new products and things like that, it is very much sitting down on a call for probably the best part of the day, even though we will call it a 1 hour call at the start, very naively, but we'll just sit down and discuss. For me personally, with product design, it's about going down every possible route and seeing which ones work and which ones don't. I don't like to just tunnel vision down one. I like to just try every possible variant, which is a time-consuming method. But that's a little bit of our process. Again, if you want to nitpick, feel free.
Have you guys ever met each other?
Not in the real world, no. There's a little bit of geographical issues there with my colleague being in South Korea, and then the other two of us, myself and Kilmac, are quite close together. I'm in West Coast Ireland, and he's over in Scotland.
Right. Will there be plans to? Is there ever going to be a point that you guys get to successes? You guys are successful, things are kind of on the up and up. Will you guys feel compelled to be in the same room at some point and just meet each other face to face, be in the same room, be able to shake hands, touch one another, etc.? I know that sounds daft, but in this space we forget that there are Sims out there in the streets that you can see and touch and interact with, and I think it's important for a team and a team dynamic that at some point people get together and see one another.
Yeah, I completely agree, and yes, definitely. I didn't want to break Kilmac's heart in the comments there as well. Yes, definitely. I remember even back, I think it was after pre-sale of Hybrid Finance, having an actual video call. It's weird. It's weird putting faces to voices that you've heard for hours and hours and hours and hours online, and then you have no idea what they look like, and it's never really what you expect. So yeah, definitely. And particularly that, I think that's something that will come in when we get into the LLC side, because there will be certain residency requirements in wherever we go, which will probably be Singapore or South Korea, but that is not set in stone at all. Okay.
Trading strategies. Talk to me about why you went for WarFi. Again, this is another argument that I appreciate. I listened to it today, in fact. your conversation with Jason, and there's a couple of things that I picked up that I really appreciated and liked. So please tell us why it is that that's the direction that you went in.
Yeah, trading bots are big buzzword in DeFi at the moment, and they are a trend that Hybrid Finance's treasury hopped on very early. It's something we caught very early, and we bounced around from loads of different trading bot providers. We originally found Shiny Jackal, who then went on to sign an exclusivity deal with Warfi, right? And we had funds in there. We loved what they were doing, and so that led us ultimately for this product to go to Warfi. Jason hit the nail on the head when we had a AMA with them. Jason, who's the CEO of Warfi, their priority first and foremost is not to lose money, and then on top of that to make money, right? And that ties in gloriously with what we're building. There are great bots out there. I'm sure most people will be familiar with the likes of Astrobit. And Astrobit bots are really good. Strategies are really good, but they will draw down 40% in like a blink of an eye. We're not here for that volatility. And also, I feel like sometimes people don't quite understand. The drawdowns are pretty bad because even though they're trading bots will make up roughly 20% of the bond portfolio, if they hemorrhage 40%, that's going to destroy all of the other returns because disproportionately, even though it's a small chunk, it's lost so catastrophically that you'll be using the returns from everything else to try and cover that, and you will just net zero if you're lucky. They will just write off a quarter of our returns, which we just cannot have happen. So
right.
Warfi 17 months straight without a drawdown. That is what we are looking for. Then they've averaged, I think it's about 8% for those 17 months, which is great. That puts them as a disproportionate contributor to the bond. So we're very happy with the rates that they give us, even though they could be considered low for trading bots. But the risk to reward, again, it's kind of going back to that risk reward, is incredibly good with Warfi. So that's what's led us to get into that.
I like the response in the drawback, and they are not again giving the sexiest payouts, but they are paying out. And no drawback in 17 months is massive, right? That is a huge achievement, and that's something that's very beneficial to you guys. How much does your interpersonal relationship with Jason play a part in this? Because I know he's a charismatic character, he's easy to get on with. Does that play a part in how comfortable you are with these guys, or is it purely down to what it is that they can achieve?
It's completely down to their product and what it contributes to what we're offering. The side effect that Jason is easy to have a conversation with is great and convenient, but that's something that we can say that we've learnt from Hybrid Finance is that, and this is one of those things where, again, I don't want to come across too harsh, but the worst thing we could do is if we could, it would just be ridiculous to say like, oh, Jason's a great guy. I've loads of fun chatting with him. So I think, Warfi is gonna succeed. I mean, he seems really like someone who's got a solid moral compass, but it's impossible to tell is the reality.
Right.
He could have a terrible one. So we've got to factor that out entirely. And the reality of the scenario is we would rather go directly to the kind of the brains behind it of Shiny Jackal, but we can't because they're exclusive with Warfi.
Right.
That's just how it is, legal exclusivity, So we have to go through Warfi. It's not a negative, but in terms of does interpersonal relationship come into that, I can confidently say not at all.
Great. A question that's been leveled at you is how rigid are you with your allocations? They say 50% into the yield farming, for example, which brings in a 2% return. Will you switch it up if and when market conditions change? And is that going to be something that goes to a vote to the community? Is it something that you guys discuss internally? How will that process work?
Yeah, so nothing is set in stone with this. It's what we would call a managed product in the sense that it is also our role to optimize it. So yes, we do want to be able to fluctuate those percentages, and they will never be exactly as listed because the nature of dividing funds into blocked purchases, for example, miners, you can't buy half a miner, so the percentages will be thrown off a little bit there. But yeah, we want to have flexibility there. Usually, the way we structure any community input is we'll kind of ask it out in chat and people can discuss it. We'll sit down, hash it out then over the course of a few days to a few options that, and cut out all of the sort of, what in our opinion are non-starters, and then provide a set of options then to the community. So we will limit it down a little bit because it is also our job to keep the product in line with what it was built for. And obviously if the community want to bend that, they can, but it's got to be gradual, right? We don't want to bobble around. We don't want to say like, okay, everyone's let's say the Fed is reversed and everyone is saying that we want to ditch it would be unlikely, but ditch WarFi and buy way more blue chips, and then it's like, oh, well, actually, Biden staggered out and said that he's going to up electricity mining by 1,000,000%. And so electricity for miners. And so everyone's then like, oh, God, we've got to sell all miners and get it back into WarFi as big as possible, right? We're not going to bobble around like that because it's incredibly inefficient. So if gradually they want to take a slightly different route, that is possible, but it's going to be, the nature of this product is kind of slow and steady, as you're probably getting the feel for. Slow and steady with everything, right? No,
the slow and steady wins the race, right?
Yes, hopefully.
And that's the key. When it comes to this particular project, when it comes to what you guys are doing, two questions. A, what excites you most? And B, what are you most fearful of?
Ooh, okay. What excites me most? What excites me most is things functioning as they should, which is not very exciting.
But it is for you, then that's absolutely fine, right?
I just, and this is the thing that's frustrated us with Higher Finance is that through all of the issues, the result is not functioned as it should, and that is a huge frustration. And because we want to be able to, the nature of our products is that they're focused on being so legitimate and tangible that we can really throw a little bit of weight behind them in terms of what we say on these sort of AMAs, right? And we can say, look, these are solid, they're going to do X, Y, and Z, and we take great pride in that what you read in the white paper is then going to be what you receive. That is so important, and that's why I keep referring to that, kind of getting those payouts in, is because that for me is that's the most rewarding moment, is when we airdrop those funds, and so then people say, God, yeah, that guy who was ranting on forever in that AMA in the middle of the night, he did what he said he would do, and that's the most exciting thing for me anyway.
Right.
Most fearful of is the exact opposite of that. My biggest fear with this is we're so heavily leaning into the fact that it's sustainable and legitimate, and so my biggest fear is something that hinders that. We cannot be in a position where we have to delay or halt something, or we cannot have any issues. That is just the position that we're in, because you mentioned, right, how hard it is going to be already to sell a product like this that isn't super exciting.
Right.
So you think the last thing you can have is an issue, because the super exciting projects, they're the ones that have issues, and they get away with that because they're super exciting. So if we're not going to go down that route, then we have to nail the delivery, and anything that hinders that is the concern. So whether it is, it would be, the main thing would just be a financial error, right? So mismanagement of funds or something like that.
Which, I mean, that answer brings me nicely on to my next question, which is a question that is always leveled at people in catastrophic terms. And everyone will always say, what black swan event is going to collapse your protocol? And I want to move away from that particular question in terms of a black swan event, because those are totally unforeseen issues that can occur out of nowhere, and no one can really navigate those kind of problems. But there must be things, small things that investors might find insignificant that you guys are worrying about in the background and trying to plug in terms of that's a hole we've identified as a potential problem that might cause us issues. Have you got those issues in mind? Are you looking at those? Because everything is always moving so fast in this space. Inevitably, you guys are going to want to move with it. What are you kind of looking at the moment and thinking to yourselves, that's something that we're ultra focused on because we want to be ahead of the game in case that problem occurs?
Yeah, that's a good one. I think Kilmac mentions things like hacks right in third parties. That's going to be a continued concern. It's never going to go away, and that affects the yield farming aspect. Warfi is someone we always have to keep an eye on because they are the closest thing to a black box sort of protocol that we have. They are the only one that we will be using, which could halt withdrawals. As in they obviously have the power to do so. So we need to keep track now. There are ways that we can quantify what is going on there, and so we can't turn a blind eye to what they're doing there for sure. I think something from a team perspective is that we need to make sure that we don't get sucked along with greed, and make sure that we don't get pressured into going into the newest decks because their emissions are high, and then next thing you know they're hacked. I mean, how often have we seen dexes hacked, new dexes, or new dexes make mistakes and lock funds or whatever it is? Right. But it's been so common recently, so we need to make sure that as time progresses, as the product continues, that we stay accurate to the risk tolerances that we outlined now, and don't get caught along or swept along in the latest trend or focus. That's not it at all. And it's those pools really that we've got to be the most careful of, and making sure that the places that we're putting our money are as secure as possible.
Right. Great answers. One of the things that you also have to be cognizant of, and I guess one of the things that could cause potential issues, are legislation coming in. Being a US-based company, you're going to have to want to put protective measures in place. What are you doing now to take those measures? Are you doing anything in particular? Do you guys have things in the future that you want to be implementing to ensure that you can be as safe as possible as and when changes come in?
So we're not a US based company. We have no team members based in the US. It would just be Europe and Asia on that front. So that doesn't dodge the question. Legislation is something we have to be careful of, nonetheless. Particularly with me constantly describing it as an ETF, probably doesn't help.
Right.
But I'm presuming the SEC isn't here, although you have enough members in here that sure they might not too far away from the SEC. So
it is always on your mind, I assume, and it's something that you guys are looking at. In terms of where you're going to base your company, how you might set the company up. Those things are things that you guys are constantly thinking about and looking towards, and wanting to make sure that you do it in the safest possible way for your investors.
Yeah, exactly. The key thing is to get that first sort of setup right. And the way to do that is to get it done for us, right? So we just once we get clear of the current workload, then the focus will come on seeking legal counsel for that and getting that all hashed out. We want to be basically able to go back through everything in terms of all the products that we'll have, and get all of the wording, everything locked down, so that again, you can't future-proof everything perfectly, but so that as legislation does progress, really we're sat there looking at it from a perspective of as safe as you can get, and so and with the joy with legislation in most of the areas that we'd be looking at is that it does come in slowly and is foreseeable to a certain extent, and so we will be able to adapt with that. But it's certainly an ongoing concern, and it's certainly an ongoing focus.
Great. One of my favorite parts of any discussion is when I probe people for a little bit of alpha. There is always alpha to be had. So if I get the response there is none, first thing I'm going to do is kick Kilmac out, because I imagine he'll be advising in the background. So I'm going to make sure he can't listen to any of this. If he's saying, don't say anything, but there must be something that you can share with us that is exciting, that perhaps nobody knows, and you can tell us first.
Oof. I might really
Putting you on
bore
the
you here. Yeah. I used to be terrible back when hybrid finance started, because I just want to like tell everyone everything is just like straight away, and that's not the nature of Kilmac's hype train, as he likes to refer to his sequence of announcements generally leading up to launches. It's a tricky one, because what we're building, we want to be like as clear as possible, and and make it as exciting as possible, as we've discussed. So I'm racking my brain here for anything super interesting, but I'm not gonna. I don't think I'm gonna get much.
There must be something. Come on, Kilmac. I can imagine him typing in the background. While you guys are discussing what is safe to say and what isn't, and I'm gonna be mean and kind of push a little bit more for it in a minute. Your NFTs, if I want to sell it on the secondary market, is that something I can do? What's coming into increasing popularity is that people are able to sell their entire position with an NFT. It's something that people are working with. Is that something that you guys are going to allow?
Yep, definitely. So you can sell them on OpenSea, on Polygon. We also will be offering buybacks. Now, this is one that it's important that we phrase right. So we will be buying them back, and that's because we completely believe in what we're offering here, and it's a product that the Hybrid Finance Treasury wants to get in its treasury, basically. It's not something we can guarantee at all, because it is done when it is applicable for us. And on that basis. But yeah, Hybrid Bond Max, the 2,500 allocation, has priority buybacks. So we will always aim to acquire those back from the market first, and all repurchasing of NFTs will be done at the value that you purchased them from us for. So $500 or $2,500. We will, you'll be able to open tickets with us basically, and try to sell them back to us, and we will always buy them at that face value. It won't be a bargaining system of decreasing value or anything like that. We'll always buy them back at face value. But yes, that is dependent on things as they progress, and how we are in position financially to do so. The nice part to look ahead with that is it will snowball, because as we generate yield from the NFTs that we put back, we will then use that more than likely to go in, or at least a decent chunk of that revenue to go back out into the market and buy back more of them. So it will kind of snowball as things progress.
Right. Okay, great. In terms of the security aspect of things, and how secure you guys are with the different avenues of revenue that you're looking at, are you constantly going to be stress testing that security? How often are you going to stress test it? How often are you going to ensure that you guys are fully up to scratch? And what are your plans if you do, for whatever reason, touch wood, it doesn't happen, find a fault somewhere and realize actually this is quite dangerous short term for our investors? Is it something that you'll just kind of let them know we're going to have to shut this aspect of what we're doing down for a bit, work on it, plug the security holes that we've found, and then we're going to kick it back up again?
Yeah, exactly. The key whenever these things are discovered is to kind of move everything away from them as quickly as possible, right? So if that's shutting certain aspects, that's shutting us certain aspects. There's and this is something that applies for me at work a lot, is the sort of the inconvenience is never as bad. No matter how bad it feels at the time, inconvenience is never as bad as the consequence of not having that inconvenience. So it is always in our interest, and everyone's interest, that if we do find a concern, not to think, that they'll go down that short-sighted route of, well, maybe we can just kind of move this around, fix this, and yeah, it'll just be fine. Whereas we're better off to go, okay, look, guys, this has happened. We just need to stop everything, not move anything potentially, figure it out exactly, and then we'll go back to it. And sometimes that will end up in you having stopped things and caused investors inconvenience when you maybe could have not done so. But it will bite you later on if you have the ethos of sort of deal with it quietly and, you know, hope that it isn't the bigger problem that you thought it was. So we'll need to be careful. There's not too many moving parts in terms of, you know, constantly reevaluating. The only contract side is just an airdrop contract that, you know, is splitting what we put into it between the NFTs. So there's some, you know, heavy testing needed on the testnet to make sure that it is comfortable handling all the different assets that we're throwing at it to then spit back out. But the beauty of that is that we can just hammer it away on testnet, and then we can hammer it away on mainnet. And you will more than likely see that as we come up to the first payout, is that we will be airdropping tiny amounts just to make sure that it is splitting them all out and it is doing everything that it should. We have a fantastic developer who's been with us from the start, and he's KYC'd with Obsidian and everything, and he's been absolutely fantastic. And we have a lot of trust in the contracts that he builds, but that comes from the fact that he always makes us test them a lot. Potentially sometimes more than we would on our own. He's like, yeah, you guys, you gotta like keep testing. We're like, we have, but it's very good for that. And then that is probably the best form of security contract wise, is just checking it and testing it. It should be pretty straightforward, so there shouldn't be many security concerns associated with it in terms of exploits, because it's not holding, like, we're not going to be putting funds into it periodically throughout the quarter. It's just going to get the lump sum and instantly spit it out. So it's not like there's going to be a big bag set there to attract hackers, really.
Okay, great, thank you. Alpha. Kilmac said you had some for me.
Did he? He's throwing me under the bus.
Yeah, he did. Yeah. He said you've got something juicy to tell us. What is it?
Okay. Yeah, Kilmac, I'm not sure, but you haven't been specific enough with me of what I can say here. So we are looking at diversifying out mining to external new providers. Some decent names. So I guess Kadena hashing, B2B side is something that we're talking to them about. We're also speaking to Xeno as well. These are Xeno's a pretty big NFT group that people might know. We are also looking at bringing on a fairly well-named YouTuber and social media sort of personality who's been involved in other DeFi projects in the space and is generally associated with some really, really solid, legitimate projects, and bringing them on not quite as a full team member, but for a pretty extensive official partner is the term that Kilmac has sent to me. So we'll go with official partner.
Exciting. So a well-respected, relatively large YouTuber that's coming in, and some other things that people are going to get excited about. Great. I am aware that I've had you now for a long time. So I'm going to start to wind it down. I could go on for another couple of hours. I'm sure you could too, but I know you guys are in pre-sale as well, and you've got exciting things going on. Is there anything that I have not covered you wish I had to this point?
I don't think so. I think, to be honest, we've covered everything. I'm going to return that question to you because I'm in no rush as well. So I'm going to return that question to you. Is there anything that you felt that you haven't, that I've avoided or haven't talked about in depth enough, or that you feel is a weak point that we haven't quite got to? Anything that a free probe, basically. That's what I was going to give you. If there's anything you want to push further on.
I was trying to find some thoughts, and I couldn't really find any. If I had to say anything, I always tend to pick on people's white papers, because I always think that they can do better. Because when I speak to people, particularly the protocols that I enjoy speaking to, and I think they've got a very good vision, I always think they do themselves a disservice with the white paper that they put out. And it's not that I didn't enjoy reading the white paper. I love the simplicity of it. I like it. But I just think you guys can represent yourselves better, because you speak so well when you're talking about your product. and you have a very clear vision in mind for that long-term sustainability. And you're doing it the right way by making sure that you're forming partnerships that are, very significant for you guys. And I'd like to have perhaps seen those partnerships represented a bit more throughout the white paper, and really explaining why they're significant for you guys. Outside of that, I couldn't really find much, if I'm going to be brutally honest. I was more interested in sitting down, asking you a couple of tough questions, maybe throwing you a couple of curveballs and seeing how you dealt with it. And you've dealt with it very well. And for the most part, we haven't had a huge amount of questions come in from the audience. So I think they've been fairly satisfied with what they've heard so far.
Good. That's good to hear. You've broken the heart of my colleague who spent the best years of his life making that white paper, but that is also no bad thing. And he's desperately whinging that those weren't partners when we made the white paper. But
Right.
I think we can definitely agree, Kilmac, that that's no excuse whatsoever. You had an hour and 50 minutes to get that changed, and you've been sat there making smart comments from the stage questions.
Let's face it, Kilmac, you had one job, and No, listen. I understand why it's gone the direction it's gone in. I understand why it's simple. I'm also someone who likes visuals. I appreciate visuals. I think you guys have a real scope for perhaps doing YouTube videos. You've already spoken about bringing on a YouTuber, but I think there's a lot of scope for you guys to add visuals to what it is that you're doing to really show people what they're investing in, and where their money is going to be coming from. And I think when you tackle that and start to give people that extra information, you're really going to go down that road of convincing people that actually the smaller returns, but the smaller returns that they can get over years to come are going to be far better for them long term than jumping into something, that's going to last maybe 3 months. Which actually brings something to mind. I have one more question for you. In relation to communication, and before I do, we're going to start running the competitions now. As David explained at the top of the Q&A, there's some tasty BUSD and an NFT and 5 whitelist spots to be earned during this Q&A. The giveaway channel is going to be opened. You have to make sure that you have joined the Hybrid Bond Discord. So in order to be eligible to win, you have to have jumped into the Discord. We're going to throw a link in to the stage questions now. They also have their own channel with us as well, so you can check that channel out. Right, so while we're getting that going, in terms of communication, I think I always get disappointed when things go wrong about how poorly a lot of these project leads can start to communicate with their community members. There is a project at the moment that isn't doing particularly well. It's suddenly hit a bit of a wall, and it is coming unstuck effectively. And what I expected was from a very good speaker, because the person at the top of that particular protocol is a good speaker, I expected them to be ahead of the information. I expected them to be ahead of the problem and really come out and talk to their community, both during live Q&As, maybe external Q&As, and constantly be in the chat to explain what's going on. And I found quite the opposite has happened. Are you guys aware of not wanting to go down that path? And do you have set things in place that you're going to want to do to regularly communicate, both with your voice and in terms of the Discord with your investors?
Yeah, definitely. That's a good point, because you tend to roll loud when our product is selling, and then we're suddenly all very shy when it's not doing very well. So it's definitely something to be aware of, because for me personally, who generally does these AMAs, it tends to be one of my strong suits. I would always prefer to hop on a call with someone or hop on an AMA and talk about it, because it's just an easier medium for me. If I want to sit down and write an announcement that's got bad news in it, it's going to take me the best part of an hour, or nowadays it's going to take me in ChatGPT the best part of probably about 3 hours of going backwards and forwards of me trying to phrase it right. It's just a nightmare. So that would always be the preference. We're going to have at least weekly updates, if not, Kilmac was throwing out bi-weekly there. It's something that is important, and it's important because it's got to keep up engagement. So it's something to be conscious of. Obviously, and it feels kind of obvious to say, but then it doesn't always translate to being obvious with other protocols necessarily. But bad news should always come from us, right? It shouldn't come from anyone else finding out, and that is very important to us. And so And the quicker that you can get this bad news out, then the better, right? You can get past it quicker, and you can get on to actually dealing with it. So
Right.
our response to any errors, issues, anything like that would always to be just set a date, set an event in the Discord, get that announced. We're having an AMA, and just discuss it out in the open there and then. Get it recorded. Tag everyone for the recording. Everyone can go and listen to us detailing it. Come back with their questions in text format after they've had a thought, and we can get on with dealing it. Then would be kind of our sort of template approach, if you will.
Great, and always coming with solutions, right? I think one of the most disappointing things is that solutions haven't been discussed, and you know, when somebody doesn't come to a problem and say, right, we've identified this is the problem, we know this is happening. In the midterm or short term, midterm, long term, these are the solutions that we're going to start to look for. I think that's also very helpful. It's you know, not just how fast you communicate with people, but also what you're communicating to them, and ensuring that your investors know, listen, we've got your backs. We know what's going on. It is something that was unforeseen, but we are here to fix it. I think that's important.
Yeah, I mean, on that topic, I would also say that we are no stranger to bad news, and you'll be familiar with that from
Right.
hybrid finance, right? And
Mhm.
and I'm sure you are familiar with it in the sense that communication was far from perfect as well. Hence, probably the question. But I would hope that when you look back on that communication, you would find that there was no shying away from the fact of the case,
Right.
and no lack to transparency and detail, and in terms of equally what we are doing as a result of what that has, how that has affected us. We've never always been instant to get a solution. In many ways, hybrid bond offers a solution to many of hybrid finance's problems as well. That is the part that a very successful hybrid bond would signify a complete resumption to regular operations for the hybrid finance token as well.
Right.
So in many ways, that is a solution. And you know, one of our something that didn't go perfectly well for us was designing the hybrid bond in the sense of settling on what we wanted to build. We had too many ideas, and we could not for our lives pick which one to build. It
Right.
just took forever, and we would just get to a certain point where we're not, I wouldn't say we're complete perfectionists, but we have no interest in launching a product that we ourselves do not fully believe in and would not buy into. And with a lot of the products that we were designing, they were good, but they had too many negatives that we just couldn't quite. Or you think when we conceived the initial idea, and then when we got as far as implementing it in a practical sense, it just didn't deliver on the initial idea accurately enough. And that took a long time, and that led to probably the biggest spell of kind of quietness on the Discord. I call it quietness versus inactiveness because I think you might have heard me say in other AMAs, you know, there would never be a point where you, if you'd pinged us in chat, that you waited more than a day for a response.
Right.
So I don't quite agree that, you know, people would say that we were, you know, inactive through that phase. Sure, there weren't announcements coming out all that time, but if you were like, what's the team doing? We would be able to provide you with a detailed breakdown of what we were building. And if you really wanted to press it, we would have been able to show you mock-up documents of everything. The amount of documents I've got on my computer from all different products that we have been building, practice white papers, different calculators, although I can't claim to be a spreadsheet whiz, that's the other guys. You know, we have the proof to back up that we've never actually left here. But communication is something else that, you know, that ourselves as a team will be aiming to improve on from the hybrid finance product as well. You know, you're asking earlier what we've learned, and being accurate and effective there is something that we have also gotten improved on, you know.
Right, great, and I'm glad that lesson was taken away, because I didn't necessarily find the communication in hybrid finance lacking, but it like you said, there were periods of quietness, and quite honestly, what it allowed me to do is have hybrid finance kind of drift out of mind. I was always in the Discord, I was always around, but it was always at the bottom of the pile. And it really took an effort from me to jump back in and say, let me actually have a look around, see what's going on, see what these guys are building. And just being aware of that, I think, is going to be super important for how you deal with the community moving forward, both during the bad times, if there are any, and during all the good times, to constantly keep people engaged. I know it's always going to be an uphill battle, and you know, people are going to inherently want to go elsewhere, and they'll dip in and out. But I think if you can keep people engaged as much as possible, you guys are going to see some very significant, steady growth, and I think that's where your strength will be.
Yeah, I mean, a lot of project strength comes from the community, right? And
Right.
the other slight response to what you were talking about earlier of that kind of challenge of keeping people interested is it's 100% being done. It is achievable. We're not the first to try and build a product that isn't the most attractive based off instantaneous gratification, basically, or quick rewards like that. I think for Fraction Mining, our mining partner, they took forever from mint to actually getting mining. I don't think they've had a payout yet. Raised I think over $1 million. And their
Right.
community, though, the main takeaway from that is their community is solid. No one's complaining. They're hugely valuable contributor. Just hopping in their Discord and having a look at, let me just remember the name of it. It's like suggestions or something. But there's some incredibly valuable input that they're getting from their community, and that's what we want to try and build here, because that will be, that will be something that pays us and the community back down the line. There's never sort of too much input from the community, so the more that we can get from that, the better, and the more that will drive engagement. And if you let people have a say in the direction that these things take, then they're going to be more engaged as well, right?
Right.
If we're all in this together to make this work, that's 10 times more engaging than you're the investor and we're the magicians over here making you tons of money. And particularly with a long payout schedule, that that feel is going to not function very well, because it is going to encourage that you sit back and stop paying attention and we'll do this, that, or the other. Whereas if we say, look, guys, this is what we're doing. How do you think? Have you seen anything that you think's better? And hopefully that can be educational as well for everyone. For people can come to us and say, well, why are we not using maybe this DEX? And well, we can say, look, from our perspective, it doesn't quite match our risk tolerance on this, and this, and everyone can benefit, and it's engaging.
Right. Yes, I absolutely agree. Speaking of community, I urge everybody to jump into your Discord. I'm just going to repost the link now, because the stage questions kind of got, oh, it's already been done. Okay, I don't need to do it. Do you want to just re-explain how people can get in, what's happening now with your pre-sale, where they can mint your NFTs, and what they can expect from today if they jump in with you guys?
Yes, and yep, I will try and keep that concise. That was an invitation to ramble if I've ever heard one. So yeah, pre-sale is live currently. You do need to be whitelisted, but honestly, look, we're not trying to make that super ambiguous. So hop over to our Discord channel and be a little bit active, and we'll get you whitelisted. You got 2 weeks anyway, so until 30th of May to get in terms of whitelisted, which you'll see in our white paper is just a discount on the hybrid bond light is the benefit there. Main mint will begin on the 30th of May, and it's on Polygon. USDC is the stable that we're taking, but you can also pay with your credit card as well. Just note that there will be credit card fees on that, so you'll end up paying a little bit more, but that's hosted through with paper, so they're a service that we're using for that, and just to make it a little bit more accessible. That's probably the main details. The way to reach us always is in Discord. We are very active there, and if you have any questions from the white paper that you want answered, any concerns, or if there's anything from this AMA that you didn't quite believe or you wanted clarification on, be sure to ask us. We'd be delighted to have a conversation. I think our Discord has grown by basically 25% throughout the 25% throughout the course of this AMA, just for reference, if you guys want to use that.
Great.
As some marketing for future projects. But
yeah, thank you very much.
It's been fantastic.
It's been a real pleasure speaking to you, and Kilmac, the man with no voice. It's been great being able to kind of interact, and certainly I've been thoroughly impressed by your interaction with us prior to the Q&A, and after we kind of decided we'd go ahead and do it. You were in here listening to the Q&As, you were doing due diligence. I think that is a real testament to what you guys are doing and how you operate. You've got very solid foundations. The partnerships that you've formed are strong, they're very strong. And I'm very excited to see what you guys do with this. I'm really going to be watching you guys with a keen eye, and may even at some point pick up one of your NFTs. So yeah, I'm going to be watching. I'm impressed. I like what I see so far. And I look forward to sitting down with you guys at some point in the future, having this discussion again, and just seeing how far along you guys are.
Yeah, I was just going to say we'd love to come back and have a future conversation down the line. It's been thoroughly enjoyable our end, and yeah, we knew. I remember seeing you guys jumping around in some of our previous AMAs, so it was something. It was one that we had our eye on for a decent amount of time. And Kilmac will be delighted to know that I actually made sure to learn off all of our numbers just to be extra sure, because he is fed up of hearing me get numbers mixed up in my brain in different AMAs, and he sat there while I'm stuttering and stammering over something like our collection size. So
Brutally mocking you at the
with
same
us.
time, right? And boasting
Of
that he has
course.
a beautiful voice. I'll believe it when I hear it. So next time I'm going to force
Yeah.
Cormac to come up on stage.
Yeah, for I don't think you'll get 197 in for that. I don't
Well,
want to be too harsh, but
for the 3 people that are listening, they might be interested to hear it. Solo, it's been a really good conversation. Thank you so much. Time has flown. I've thoroughly enjoyed it. And I really look forward to us having this conversation again at some point soon.
it was a pleasure. Thank you very much for having us. Genuinely a very enjoyable AMA, and yeah, some great insight from yourself. So we very much appreciate it, and we will put good thought to it.
Thank you so much, and thank you to the audience. Thank you guys for staying this long. I'm glad to see that hardly anybody dropped off. And jump into the Discord, have a conversation with the team. They're going to be happy to answer any questions. And a good night, or a good afternoon, or good morning to all of you guys. Take care.
Yes, bye bye.